This is not financial advice. I'm recording my thoughts about Datadog stock. The stock is currently trading at about $67 with a market cap of about $21 billion. I've been following this stock since it was at $149 and I did not dare to buy the stock because it was really expensive. I also looked at it when it was at $100 and I also made a video about it. And I was waiting for a good price to buy into this stock. And Datadog is an application performance monitoring and observability SaaS provider. It's hard to understand that if you do not have a computer science background, but what you can do is to look at Gartner's Magic Quadrant and you can see that both Datadog and their competitor Dynatrace are the leaders in this sector. And I also have seen another company classifying all the companies which operate in this sector, and they also think that Dynatrace and Datadog are the leaders. So when you buy a stock of a leader in a particular sector, it's hard to lose all of your investment. It actually reduces the risk unless there is another disruptor who comes in and takes all the market share away from these leaders. But one of the ways a company distinguishes itself from its peers is with revenue growth. This company made about $100 million of revenue in financial year of 2017, and currently it makes about $1.6 billion. And while doing this, they have maintained more than 77% gross margins, and that is impressive. Their dollar-based net retention rate is about 130%, which suggests that a lot of their clients like them. And they have about $1.9 billion of cash and cash equivalents on their balance sheet. So that is good news. This company's net income was about minus $50 million in the past year, which means that they're not burning a lot of cash. So having $2 billion of cash in their balance sheet would help them not dilute the stockholders. Datadog has more than 23,000 clients and they have 17 plus products in offering. Let's look at why the stock has fallen significantly. That is because of their guidance for next year. They grew about 65% in the previous year, and now they're saying they can only grow about 25% in the next 1 year. They're guiding for about $2 billion of revenue in 2023. We do know that they have a consumption-based model and a lot of companies would cut on their cloud spending this year, and that's going to affect Datadog. But in my evaluation, I'm assuming that Datadog can get back to higher revenue growth after 2024. Now let's look at 2027 Datadog stock valuation to check where the stock would be in 2027, and that would give us a reference buying price for this stock. We do know that in 2022 they made about $1.68 billion of revenue, and I'm estimating a growth rate of 25% for the next 5 years. So in 2027, they can make about $5 billion of revenue. The gross margins are in the order of 77% plus, so I can assume a net profit margin of 30% for this company, with which they can make about $1.5 billion of net income in 2027. And for a company that's growing at 25% and has a net profit margin of 30%, I can assume a multiple of 27.5, but I'm willing to pay a premium of 30 multiple for this company because they're expanding into other revenue segments. They're constantly releasing more products in other sectors to get more revenue from those new revenue segments. So that deserves a premium. So I'm giving a premium multiple of 30, with which this company would be worth about $46 billion. Currently, they have about 319 million outstanding shares, and on a fully diluted basis, it's about 350 million. The previous year net income is 50 million. They can burn about 50 million each year, and that's nothing compared to their cash position. So I'm assuming that there will not be any more dilution. If there is dilution, I'll make another video, but I'm assuming that there will not be any dilution, with which this company's price would be about $132 in 2027. $67, right? That's about 97%, almost 100% gain in 5 years with reasonable assumptions. This stock can get cheaper in coming years, but I'm willing to take a 2x with reasonable assumptions for this stock to initiate a position in this stock. So I'm only going to spend about $500 to $1,000 at this price, and I'm going to follow this stock quarter after quarter, and if I see better execution than my assumptions, I'm going to add to my position.